A very good morning from Khandwala Securities Limited and welcome to Monday's trading action at Dalal Street dated April 18th, 2022. Market turbulence may be a theme in today's trading session as investors at Dalal Street brace for a brand new session after a long weekend. Our call of the day suggests Dalal Street is in crisis as a perfect storm is looming on backdrop of headwinds like first, surging inflation, second, recession fears, third, growth concerns, fourth, FIS selling, fifth, uninspiring start to India's corporate Q4. Now before we get into details, here is the preferred trade on Nifty and Bank Nifty. Nifty current market price 17,476, sell between 17,500 to 17,550 zone, strict stop at 17,989, target 17,427 and then at 17,157, aggressive targets at 17,001 zone. Bank Nifty current market price 37,463, sell at current market price, stop at 38,889. Targets 37,305 and then at 36,266. Aggressive targets at 34,727. Outlook for Monday. The street will first react to Infosys earnings announced after market hours on April 13 and HDFC Bank numbers which were released on April 16th. Well, Infi Q4 misses street expectations with profit falling 2.1% sequentially on lower than expected revenue growth and a fall in the margin. Revenue growth in dollar terms was 0.7% and the growth in constant currency was 1.2% on a sequential basis, with deal wins at $2.3 billion for the quarter. For the financial year 2022-23, the Infosys forecast revenue growth in constant currency in the range of 13 to 15% and operating profit margin is estimated to be in the 21 to 23% range. Meanwhile, HDFC Bank records 23% year-on-year growth in profit, asset quality too improves. Commanding attention in today's trading session will be Q4 earnings to trickle in today, Mindtree, Muthoot Finance. Technically speaking, Nifty's intraday support seen only at 17,427 mark. The make or break Nifty's medium-term support seen at Nifty's 200 DMA at 17,160 mark. Only below Nifty 17,160, expect waterfall of selling which could take Nifty down to 16,691 mark with inter-month perspective. From a chartist standpoint, the technical landscape will improve considerably only if Nifty closes above its biggest hurdles at 17,927 mark, intraday hurdles at 17,691 mark. Bank Nifty ended on a sluggish note in last week's trade. Bank Nifty's biggest make or break support seen at 37,301 mark. Expect waterfall of selling below 37,301 mark. Hurdles seen at 38,003 mark. Confirmation of strength only above 38,283 mark. We have a negative bias on Bank Nifty for the day. The Nifty options data for April series suggests Nifty is likely to be in a trading range of 16,500 to 18,000 zone. Maximum call open interest at 18,000 followed by 17,500 strike price. So the 18,000 mark will be Nifty's crucial resistance zone. Maximum put open interest stands at 17,500 levels followed by 16,500 levels. Call writing was seen at 17,600 and then at 17,500 strike price, while there was meaningful put writing at 17,500 and then at 16,500 strike price. Bank Nifty's maximum call open interest at 38,000 strike price and maximum put open interest at 36,000 strike price. FIs were net sellers in last week's trade to a tune of Rs 6,334.5 crores, suggesting that there is still lack of certainty on the direction of FPI flows. On the inflation front, there is no respite in sight as WTI oil prices scale above $106.50 a barrel. The 10-year USD bond yields dropped to 2.87%, highest in 3 years. Uncertainty over Ukraine conflict should keep Nifty under increased pressure. That's all we have for now. For any queries, do contact us at 022-4076-7373 and do visit our website www.kslindia.com. Thank you and have a profitable day. Please note that the stocks mentioned in this podcast are only for educational purpose. Khandwala Securities Limited or any of its employees shall not be held responsible for any investment or trading action undertaken by any person based on the stocks mentioned in this podcast.